Hello guys, welcome back to the channel, and today I'm teaching you about support and resistance on the lower time frame and on the 1 hour. That is why I'm going to be handling our support and resistances. So for context, we're going to be looking at this area here. It is how many hours of price action. I start from here to here, 3 days of price action. So that's what we're going to be looking at. It looks like a consolidation. I know they have always told you that in consolidation, during consolidating markets, you stay out. But I'll show you how to trade a support and resistance in a consolidation. It is actually very easy. You can do it. You just have to be a little bit careful and cautious. I'm going to show you. It is a comprehensive guide, so don't worry. So we'll go straight to the charts. However, you first subscribe to the channel. We are on the road to 200 subscribers. So guys, subscribe to the channel and then I'll proceed direct to the video. So I'll give you 5 seconds. You subscribe, then I proceed direct to the video. Okay guys, subscribe. Okay, so we have this is GBP JPY on the screen, and I'm going to tell you how it's going to be a comprehensive guide how to trade a consolidation with support and resistance. So this is GBP JPY on the screen, and this is the 1 hour time frame. So that means if you're marking, like I told you, if you're marking your support and resistance on the 1 hour, you're going to be trading below the 1 hour. If you mark them on the 1 hour, you trade them below the 1 hour. If you mark them on the 4 hour, you trade on the 1 hour. If you mark them on the daily, you're likely to trade on the 4 hour. If you mark them on the weekly, you're likely to trade on the daily and the 4 hour. Okay, if you mark them on one time frame, you'll trade them on the one time frame below. So what do we have here? We have GBP JPY, and this is the 1 hour. So first things first, time frame. Second, you're going to go to the line chart. So when you got the line chart, what do you see? You see turning points of the market. So you're going to mark your turning point. Today let me use what I always use to mark my support and resistance. So these are your turning points for this price action here. I want it to be straight there. Good. So for support, these are the turning points. Remember I told you in the previous video, when you're marking your support, you're not going to consider every turning point, because they are not going to always be equal. So what you do is you mark the popping turning points, and then the rest is, I know they'll be touched by wicks like this one. If you go to the candlestick chart, you're going to see wicks touching this significant point like this. You see there is a wick touching the point and then it turns around. So you don't have to mark up here. You can get the 2, 3, 4 point that touch, then the rest the wick can touch there, it is okay. Guys, English is not Englishing. Okay, so which other turning point do you see on for resistance? Up here we have this one here, and then we have these two up. So we shall mark the last ones. Why? Because if you mark the last ones, it is easier for the ones that are below to be touched by the wicks. So we mark the last two. I always want them to be on the straight line. I don't know why, but somehow I don't feel okay or comfortable when they're not on the straight line. So I keep on adjusting them. Now I just want them to be equal. Okay, so now they are equal. So what do you have here? You have a range or a consolidation. Have a consolidation of price action. So now you have marked them. You see the ones that are not touched by price action, they're touched by a wick. A wick. So how do we get this support and resistance? For example, assuming this whole thing is not here, let me mark it for you. Assuming this whole thing up to here, it is not there, and what do we have? Let me show you. So like this. Good. Hey. No, 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 no. Can I put it into which color? Anyway, let me just leave it like that. So assuming this whole thing in white is not there and price action has just hit here, it is moving up. You mark here as your support. So when it reaches here, reject starts going down and it goes down drastically, you mark here as your resistance to trade from. Or if you have found it within the range, like for example, it has tapped here once, two times, then here once, you mark here and you mark here. So that is going to be your range you're going to trade from. That is going to be your trading range. I hope you just got the point that I wanted to make. So that is going to be your trading range. So now, what do you have here? You're going to be moving within this range. How many pips do you have in this range? We have a maximum of 100 pips. Surely that is enough for the trading. 100 pips should be your enough. And where is the stop loss likely to be? The last far price action has gone. That is 20 pips below for the buys. Because you see, if you put it here, this one tried, did not reach, shot up. This one tried, did not reach, shot up. So you're not stopped out on any, even the second one you're not stopped out. So your stop loss pip range is going to be within 20 pips. And then on the sell side, your stop loss pip range is going to be, first of all, the pips are going to be still the same, 100. Stop loss pips range for this one, it shows us how many? 14. But 14 is too little compared to what we have down. So this one we can adjust to 20. 20 like with the one we had down. So you do the same up and down. However, here you would have stopped out. You would have stopped out on this trade. You would have been stopped out on this trade. But then it really matters. It doesn't matter. Why do I say it doesn't matter? For example, price came here. You put your stop loss of 20 pips. You got 100 pips. When you reached here, you sold. You put your stop loss of 10 pips. You got another 100 pips. Those are 200 pips and 2 wins. So then price came here. You put your stop loss of 20 pips. You bought. You got another 100 pips. Those are 300 pips. 3 wins, no loss. And then it came here. You put your stop loss of 20 pips. Then you got hit. That means you have lost $20 out of 300. That is 280 profit. You lost. So it came down again. You bought with your stop loss of 20 pips and then you got 300. So you have lost 100 out of 4. You have lost 100 out of 5. And then from the losses you have lost $20. From the wins you have won $480. So that is a good risk to reward. So you shouldn't worry. So now how do we trade this? Simple. Like I've just told you, when price comes here, back here, we are looking at buying. The stop loss is supposed to be down here. We send it up. Even without confirmation, you can just do that. And then your risk to reward is going to play for you out in the long run and you're going to be winning. So when it comes back here, this is, remember, our resistance we're expecting to sell. We sell it down here. When it comes back here, this is our support we're expecting to buy. We buy it up here. When it comes back here, it just repeat the same process in this range. Remember, this is a range, but you're buying and selling in this range. So now how do you trade this? Well, you go to the lower time frame. What you see as a range in the lower time frame, in the high time frame, when you go to the lower time frame, it is going to be a huge impulse range on the lower time frame. A huge impulse trend on the lower time frame. And when you're going low, don't go too low. Go at least for this one, go to the 15 minutes time frame. You're going to see a huge, this is going to be like a full trend on the lower time frame. Yet on the 1 hour we are in a range. So you trade within your support and resistances. I cannot go to the 15 minutes because TradingView is not going to give me those much bars. I'm not using a paid for plan. This is a normal plan. So I just wanted to show you how it's drawn and how it is traded. So I hope you have learned something, but if you haven't learned, this is a basic video, guys. This is a basic video. You bought here, here I didn't buy because this was the first support, this was the first resistance. So now price came, it did not reach here, that means you did not buy. When it came back here, you sold. After selling, it brought you just 1 hour price action and gave you 100 pips up to down here. 1 hour, engulfing all these 1 hour candles, showing you that, remember, this is 1 2 3 4 5 6 hours of price action were engulfed by one candle, showing that at this price level here there are a lot of sellers that are willing to sell. So when it reached here, you know that we bought here massively up to here, so you buy again, takes you up to this level. When it reaches here, don't complicate things. You're looking to sell. Remember, your risk to reward is what plays out in the long run. Don't fear losses, because losses are always going to be there. Whether you organize your trade in whatever way, in forex you're always going to encounter losses. So now, putting that in mind, that means the only thing that is going to make you profitable is your risk to reward ratio. So now you reach here, you're now going to sell. Don't fear, sell. Your stop loss should be 20 pips up there. Sell, and then be patient. Price will play out, and then when you come back here, we have bought here before. You are looking to buy, you buy, it will take it up here. When you reach here, don't fear, we have sold here before. Sell. When you sell, it will bring you here. Remember, 100 pips, 100 pips, 100 pips, 100 pips, then another 100 pips. That is 500 pips. You get one loss, which is $20, then that is 480. So your risk to reward is playing out in the long run. That is it, guys. You can see these things happening, then they happen over and over again. And so eventually price broke out of our resistance zone. And where did it react? It reacted in the previous demand. I think this was a high time frame supply. That is where it reacted from. High time frame supply, and after reacting, it sold up to here. I know there is high time frame demand somewhere, I can't go that level. High time frame demand somewhere that is sold into, and then came back to this. Now the support was adjusted, came back here, did not hit the stop loss, sold off, came back, did not hit the stop loss, sold off. So guys, the thing is supposed to be simple. Please don't complicate it. What plays out for you in the long run is your risk to reward. But almost all the strategies that we have in forex do work. They all do work. What plays in the long run is your risk to reward ratio. Okay guys, if you've learned something from the video, kindly subscribe to the channel. Also like the video for it to move to more people. That is all for today. Bye.